In this session, we are going to look at how to answer ACCA Strategic Business Reporting Section B questions. So I have two compulsory questions in Section B, each carrying 25 marks. That's a total of 50 marks, and that is 50% of the exam. So it's very important, friends, that you are comfortable with answering these questions and how to deal with them on the day of the exam. So we're going to look at the 6 Ds. I call them the 6 Ds. Have these in mind as you're attempting questions, as you practice. So the first D is discussion. We'll look at each in detail. The second D is definition, divide, debts, double entry, and disclosure. All right, so these are the 6 Ds which are key in properly attempting Section B type questions for this exam. So the first difference, discussion. Now, it goes without saying, the requirements in your exam will be discussed. Okay, all requirements for the two questions will be discussed. So they already discuss or explain. So therefore, you cannot just provide a string of calculations, a string of numbers with no explanation. You have to explain or you have to discuss. Okay, there are in fact certain questions which are totally 100% theory or discursive. So the key part of the requirements will be the verbs discuss or explain. Now, this entails, friends, as you are doing the discussion, very important, you need to apply application to the scenario. So you don't just regurgitate knowledge of IFRS or just reproducing the knowledge of IFRS. You have to look at what's happening in the scenario, what's the issue in the scenario, link it to the requirement. Okay, what are you required to do? Okay, and the marking scheme is very clear on this. The SBR marking scheme, marks are allocated when you are linking your answers to the scenario. Okay, the marking scheme is clear. Application to the scenario. So was there application to the scenario? You see the marks. Application to. If you don't apply to the scenario, you get very few marks, if any. So it's very important that you apply to the scenario. Okay. Now we have to look at what's been presented in the scenario. Most of the times there's a transaction or an event which has occurred, and the directors are proposing to treat it in a particular way, or they've treated it in a particular way, and most of the times that treatment is not correct. So you always ask, is the proposed treatment correct? And most of the times it's not correct. This is why they're asking you the question, so that we can then show and discuss the correct treatment. And to help you answer the question, you need to use relevant IFRS or the framework in answering or dealing with that particular problem which has been presented to you in the scenario. The second D is definition. Okay, now this friend may present a very easy mark in the scenario. Look out for what's the issue in the scenario. Okay, what's the relevant IFRS, for example? What's any key terms that needs to be defined for you to properly answer that question? So examples that have appeared from past exam questions. So these are just examples. So for example, it could be a scenario to deal with impairment. Okay, so it would be important to just provide a definition of what is impairment per IS 36. All right, or we may be looking at IFRS 9 credit loss, credit risk losses. So PIS 36, so impairment occurs. For example, you define what that is. Okay. It could be a scenario to deal with issues of control, consolidation. Should you consolidate the entity that has been acquired? Is there control? So what's the definition of control? So you need to know that by IFRS 10, control is defined as. So you should be able to define that. Or again, it could be a business combination issue. Is it really a business? Okay. So what is a business? So IFRS 3 would define a business as an integrated set of activities and assets capable of being managed. And so you need to be able to define the key terms. Okay. Now, be very careful here. I'm not saying start answering and just start defining words. No. In a certain exhibit, it could be an exhibit, as I said, it could be an impairment. So just one definition, what impairment is this, and that. Okay, it could be something to do with fair value, for example, in your IFRS 13. IFRS 13 defines fair value as probably just one definition. Okay, so don't start now just defining things all over the place. All right, but this generally present an easy mark, friends, for you in the exam. The third D is divide and conquer, friends. Now, your exhibit, friends, in the exam may be lengthy, okay? Lengthy with lots of information that trying to read it all to the end may be confusing, okay? So it could be a lengthy exhibit given to you, a lengthy scenario, and if you're trying to read the whole scenario to the end, you may just get all mixed up and confused. So very important to divide, especially if look for paragraphs. Okay, are you given paragraphs? Okay, now a paragraph generally represent an idea, a separate idea. So try to deal with a paragraph at a time. If you can break it up in small chunks, okay, at this point, what's the issue? Okay, because at times when you trying to read all the information, it may just get murky and confusing. All right, so divide and conquer, friends. Deal with a paragraph at a time. There are certain questions, in fact, an earlier paragraph may not be related to the next paragraph. Okay, so try to divide. Deal with small chunks of information at a time, to avoid confusion. Some questions, some exhibits may give you dates. Okay, now friends, these are not for decorations. Okay, you're given dates in the exam, use them. You can use them to structure your answer. Okay, very important. You can use dates to structure your answer. Now, remember, in section B, you have 4 professional marks. So you have 2 questions. Each will have 2 professional marks. So having a well-structured answer, subheadings, okay, clearly labeled, paragraph split, plenty of white space, that will help you get those 2 professional marks. So that's one way you can use the dates given in the question. So as at this particular date, this is a situation. Okay. So for example, you have to look at, for example, what's the initial measurement of an asset or liability if the transaction or event given in the scenario. So suppose the initial measurement is 1st January 20, whatever year that is. How should it be measured on initial recognition? Okay, should it be fair value? Should it be cost? Okay, it could be a financial asset, for example. So is it fair value? What do I do with the transaction cost? It could be IAS 16. What will make up the cost on initial measurement? Okay, it could be a liability. How do I measure it initially? Is it at present value of the future payments that I'm to make? Okay, so what does the standard say? What happens during the year? So you have to look at subsequently after initial measurement. So the dates are key. Okay, what happens during the year? Changes in fair value. Do they go to profit or loss, or taking them to other comprehensive income? Is it an asset? Does it require depreciation, for example? Is it an investment? Is there interest to be received? Or is it a liability? There's interest to be paid. There's interest to be accrued for. Okay, so what happens during the year? What happens at the year end is, for example, for an asset, you have to review it for impairment. All right, so use the dates given. So as at this particular date, this is a situation. As at this particular date, this is what should happen. All right, use the dates in this scenario. Linking on with the previous point of dates, friends, is double entry. Okay, what's the accounting treatment? Okay, if given numbers, you have to illustrate. Remember, application is key in this exam. You have to apply at this level. All right, you have to apply the information in the scenario. So can you demonstrate with the numbers given? Okay, what's a double entry? So on initial recognition, what are you debiting, what are you crediting? Similarly, subsequently, the changes, where are you taking them? Okay, so very important, your double entry. The 6D, friend, is disclosure. Okay, most students ignore this very easy mark. It's a very easy mark to get. Very few students remember this. Okay, now in practice, friends, there's a lot of disclosure which goes along with the financial statements. A lot of disclosure. Okay, this is because most of the figures in the financial statements are based on assumptions, estimates. So it goes without saying, you need to disclose, friends, material facts which will enable a proper understanding of the financial statements. And this is a requirement in IS1, that you disclose material facts which will enable the user understand the financial statements. All right. Examples of these, those that can cast doubt, for example, on going concern status. You have a scenario where you're dealing with IS 37, for instance, provisions. There's a pending court case that the entity is dealing with. Okay, so depending on the outcome of that case, if things go against the entity, depending on how material that could be, it could cast doubt on the entity's going concern. That fact must be disclosed. Okay, and you have to state that in your answer. Disclosure of the, for example, when you're dealing with IS 37, a material fact, this could lead to possible doubt on going concern status. You could be dealing with a question on impairment on IS 36. Okay, you're trying to determine a recoverable amount. So recoverable amount, it's the higher value in use and fair value less cost to sell. So value in use, the present value of future cash flows. Okay, from continued use of the asset. Future, that's an uncertainty. Okay, is the basis for the cash flow forecast. You may have to disclose that. The users will need to understand, because where are these figures coming from, which you are using for determination of value in use? Okay, what's the basis for the cash flow forecast? All right. Assumptions made when determining useful life, for example. All right. Lots of assumptions that go in the preparation of financial statement. You may be dealing with a share-based payment, IFRS 2. When you're looking at visiting conditions, number of employees who would still be employed by the visiting date. Okay, what's the basis for those assumptions? 2 employees will leave. What's the basis of that? Okay, so disclosure. Okay, there's you have to look out for this. This is another easy mark. Okay, again, I'm not saying in every scenario, but depending on what's in the scenario. what you're dealing with. Remember, IS1 requires disclosure of material facts. Okay, so a very easy mark to get in the exam. All right, so friends, there you have it, the 6 D's. All right, so remember, friends, it's a discussion question. It's section B, discuss, explain, apply to the scenario. Okay, definitions. Okay, easy definitions that you may easily define depending again on what the issue, the transaction is all about. Divide and conquer. Divide, friends. Split it up. Make it manageable. Split up the information. Okay, split it up. Your double entry. What's accounting? Initial recognition, subsequent measurement. Very important, friends, that you look at that, as well as disclosure. All right, so that's the end of this short session on how you answer ACCA SBR section B questions. Please, friends, subscribe to the channel for you to get regular updates. Click the like button if you like this video. All right, till next time, cheers.